What's up everyone, it's Scotty with Money Vesting. So a huge day coming out tomorrow. We've got the inflation numbers at 8:30 a.m. Eastern. I will be live to cover that report. So in less than 12 hours, we're going to find out the new CPI numbers, headline and core for the previous month. The debt ceiling debate seems to be going nowhere, and the markets were slightly lower in anticipation of tomorrow's report. So we got lots to go over and lots to unpack in this video. Make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. And the link to our Discord and Patreon is going to be down below if you're interested in joining us. And there is a 16% annual discount available for you till the end of this month with limited spots left. If you want to get access to all the buy and sell alerts, options alerts, trade ideas, and all the other benefits, including the private live streams on Monday, Wednesday, Friday. I did ended up selling a cash secured put on PayPal considering how much it was selling off and the fact that premiums were also decent because of the big red day that we saw today from PayPal after the earnings. So again, link's going to be down below if you're interested in joining us. So this right here is going to be the update. So no progress in the U.S. debt ceiling debate. So House Speaker Kevin McCarthy confirmed that neither side was budging in the battle to control the U.S. debt ceiling, with the nation's debt standing at roughly over $31.7 trillion and rising. After an hour-long meeting with the president, McCarthy said that everybody in this meeting reiterated their positions that they were at, and I didn't see any new movement. Well, the X date is coming in fast. I think it's the first week of June, and after that, we're obviously going to have to figure out what is going to be the state of the U.S. economy and the debt itself, because most often or not, we have seen the debt limit either be raised or completely suspended. So I have no doubt in my mind that eventually this will also happen. It's just, they're going to go after each other, make it seem like they're doing something. But at the end of the day, we know that this is going to either be raised or suspended altogether, because without the debt ceiling, without the debt limit, really, the U.S. just comes to a halt, right? We're going to see government shutdowns. We're going to see bills not get paid. We're going to see credit agencies pretty much downgrade the U.S. debt. So there's going to be a lot of catastrophic events if the U.S. debt ceiling is not raised or suspended. If we continue to go back and forth with this, the time is obviously quickly approaching. Now, because of this, we did see the 10-year yields, the 20-year yields are all on the way up again because of this rising risk of the U.S. once again defaulting on its debt. We now have the 3-month Treasury yield back over 5.27%, with the 6-month once again trading past 5.2%. So you'll notice that we were at over 5.3, 5.4% just a few months ago, and now we're starting to, or obviously we did get sold off here, and now we're slowly and steadily making our way back up, especially when it comes to short duration bonds here from the Treasury Department, because they are now perceived as more risk, considering that the probability of U.S. defaulting has increased or is increasing day by day. So that very, very important debate. We'll continue to monitor this. And of course, we've got the inflation numbers coming out tomorrow at 8:30 a.m. Eastern. The consensus right now is going to be 0.4% for CPI month over month. For year over year, we're looking at 5%, and that's going to be consistent with 5% from last month. And ex-food and energy, the consensus is 0.4%, and year over year coming down to 5.5%. So a little bit of a slowdown from the previous month. And I will be doing a more separate, more dedicated video on a CPI as well later today. So this right here was a state of the market. So semiconductors and chips selling off. AMD was flat. Texas Instruments were slightly down. NVIDIA down almost 2%. Qualcomm was down over 2%. And we did have Broadcom, Intel, all these companies pulling back, with Apple down 1%, Microsoft down 0.5%, Tesla down about 1.5%, with Amazon slightly higher. And we did have some industrials and mostly defense companies like Lockheed Martin, Raytheon, and Boeing pushing higher on the day, with Salesforce also doing a lot better. And of course, the big winner on the day was Upstart, up over almost 40% after hours. And the big loser, of course, not to mention, was PayPal, down over 12% on the day. But overall, this is really what the markets look like. And it was kind of like the calm before the storm, because tomorrow is the day of the reckoning, because we've got the inflation numbers. And if the numbers are good and the inflation numbers are suggesting significant slowdown in price increases, or we're seeing some disinflation or deflation, that obviously is going to be very, very good news for the market. It's going to reaffirm the market's stance of a potential rate pause and a rate cut eventually in 2023. So there's a lot of expectations baked into this inflation print, and the market's already pricing in a lot of things. If there's any disappointment whatsoever, we got to brace ourselves. We got to be ready for what could happen to the markets, because right now we're going into this report with hopes set super high. This right here is the different sectors. So industrials and energy doing a lot better. Other sectors selling off. In the last 1 week, we've got consumer defensives, the only sector that's underperformed and coming down about 0.5%. Everything else, most sectors are green. And in the last 1 month, we've got energy as the biggest underperformer, down 4.6%. And all other sectors are mostly flat, down 1% to as much as up 1%. And again, it's kind of like a split market. So we're not really seeing a lot of momentum for any individual sector, so to speak. But of course, energy is the one that's really underperforming and selling off here on the month. Now moving over to some futures and commodities. So cocoa prices, coffee, feeder cattle, lean hogs, live cattle, all pushing higher, with orange juice prices selling off here pretty aggressively. And Bitcoin, it was a little bit under 28,000. Ethereum, a little bit over 1850 as well. So if you come over to crude oil, we are just hovering around $73, $74 a barrel. So we're literally at that resistance for crude oil, where we have previously gone rejected and validated as a support. And right now we're just kind of battling through that level once again. So this right here was a time when supply cuts happened from OPEC plus nations. We had a very nice gap up. We had a breakout all the way up to $83 a barrel. And since then, we have pretty much fallen close to 18 to 19%. So despite the supply cuts, we're still seeing prices roll over and come back down. And now we're seeing a little bit of a rally back higher. We're seeing a very minor push back to over $73, $74 per barrel. So I've already gone over the CPI numbers, and energy prices were slightly higher in the month of April. So it's going to be quite interesting, what energy looks like, because energy is the only sector that's been under deflation in the last 1 year. It's actually down on a year-over-year basis because of how much oil prices are lower from their peak. They're down about 40-45%. So again, right now we're watching $73, $74, and this obviously drives overall inflation and overall inflation expectations. So that is something to also pay attention to as well. Now talking about Bitcoin, just trading sideways, not really moving all that much, and 27, 28,000, we're just kind of hovering around those levels. 30K is going to be that resistance to watch, with the support sitting roughly at $27,000, and we got Ethereum with a resistance at 2,100. More recently got rejected at those prices, and support level is going to stay put roughly all the way down to as low as 1,700, 1,730. Now going over to volatility is a little bit more subdued, a little bit over 17.7, up over 4.3% on the day today. And tomorrow, I'm sure volatility is going to be very, very violent in the way that it moves after the markets react to the inflation numbers, because it is definitely a very significant market moving event. And VIX obviously has been very, very silent. It has not really played a significant role, considering that the markets have just been pushing higher. We did see a bit of a pullback in February, of course, but now we're back to that same resistance of supply, of that bear camp, and levels that we're fighting between the bulls and the bears. The battle's going on. So this right here is going to be that level, and NASDAQ continues to try to find a way to break out. Even yesterday, we got up to as much as 12,260. Again, we're not able to break out above that level, sold right back down, and today we're down another 63 basis points. And same thing is true for the S&P 500. Again, you can see that we're constantly trying for 4,200. This is probably the longest time in more recent history that I've seen the markets struggle, that I've seen the markets really trade sideways, because we are right now directionless, right? We are not going higher, we're not going lower, we're going literally sideways. And that's what we have seen from the markets in the last couple months now, several weeks, where the markets have literally gone nowhere. I mean, this is since the beginning of April, where the S&P 500 has literally just traded sideways. Not to mention we're at the same level as we were back in February of 23. Not to mention that we're at the same level as we were back in May of 22. So it's been literally a year where the markets have traded sideways. Of course, we've seen some small burst of rallies and some sell-offs during that entire year, but on a net basis overall, we're still struggling at 4,200. We're not able to break past 4,200. The supply and the bears at 4,200 are very, very strong. Talking the same thing about the NASDAQ, same story, 12,260 points. We're at the same level as we were back in February, same level as where we were back in May of last year. We've just consolidated sideways. I mean, we are literally in this box of consolidation for the longest time. We're not able to move higher or lower. And not higher because, again, there's a bear camp sitting above us at 12,300, and not lower because the bulls are determined. They are determined. There's a lot of rate cuts priced in. There's a lot of soft landing scenarios baked into the market, and as a result, the bulls are fighting. It's just going to come down to inflation report tomorrow. If that's going to be the catalyst to drive that liquidity, to drive that volume, to break us out above this level, and if so, of course, next resistance level is going to be 13,000 on the NASDAQ, and S&P 500 is going to be cheering on for 4,300 as the next level. Now, going over to some of the individual stocks. Before we do that, just quickly going over the S&P 500 as well. So again, we're at the bear camp, as we've already talked about, and we have seen a lot of consolidation in that range for the markets. And once again, we're starting to see a bit of a pullback this week. The markets are down 41 basis points. Last week, we were lower, about 0.8% as well. Talking about the NASDAQ, same thing. We're just kind of losing steam here at this resistance. Again, tomorrow is going to be very important for us to see whether we get a breakout or, once again, a rejection and start to roll right back down. But that resistance is going to stay up at 12,300. Now, talking about Apple. Apple here on the day was down about 1%. So again, we have to understand that it is getting back up to its overbought territories. RSI and on the weekly chart is overbought. So is the MACD. So resistance is going to stay put at roughly around 177, 175, in and around these levels. And I'm super cautious with Apple here. I'm not buying at all, considering how not only expensive from a fundamental standpoint this stock seems, but also from a technical standpoint, they've seen a very massive rally, and right now it is overbought. So I would look at, maybe selling covered calls as a hedge to protect on the downside if I do want to own the stock for the long term. But as a new investor, as a new buyer, 171 is, in my opinion at least, not the price to pay for a company that's expected to grow, let's say, mid-single digits or even high single digits, but the growth rate isn't justifiable for a 28 to 30 times price earnings multiple, not to mention a $2.7 trillion market cap. I think this has been a lot more of a safety trade where investors have concentrated into Apple to basically avoid the volatility and the uncertainty with the rest of the market. So this has been more of a flight to quality type trade as opposed to anything else, in my opinion. Now, talking about Amazon. Amazon here starting to push right back up a little bit, 75 basis points. We're still in the context of this lower highs and lower lows. So you can see that we're still getting rejected here at this lower high, and we've got the lower low sitting right at the bottom, and we're slowly and steadily trying to make a move to the upside. Resistance now is going to stay put roughly at 114, 115 levels. So this right here are going to be some of these levels to watch for Amazon. And again, tomorrow is going to be a big day. We're going to find out whether Amazon breaks to the upside or once again gets rejected. Talking about Tesla, and Tesla here on the day was down about 1.5%, so seeing a little bit of a pullback on the day. And once again, we're at a resistance, right? 175, 170, that's a big resistance for Tesla. In fact, today's high for the day was 169.82. So once again, we're at that resistance inside this red rectangle. So whether we get a breakout or rejection, of course, time will tell. But it is going to be difficult for Tesla to recoup some of those moving averages and, of course, start to break back up to the upside. And you can see that we're consistently trading below those 200 simple moving average as well. So again, we got rejected here, got rejected here. We're not able to break back or trade back above that 200 simple moving average for Tesla. So those are some levels to watch. Support level is going to stay put roughly around 140s, 145, 150. And if it continues to sell off, I will be looking at selling even more cash secured puts on Tesla once again. So the ones that we sold earlier, up 75, 80%, we already closed them out. And if it continues to sell down, I will be looking at selling new ones. Talking about NVIDIA now, and NVIDIA on the day was down about 1.99%, so almost 2% here, down to 285, and we are at a resistance again for NVIDIA. So it's going to really come down to their own earnings when they report at the end of May, which I think is going to be the make it or break it type deal for NVIDIA, because like I said, I mean, expectations when they are set for sky high, like they are literally perfect, right? Expectations are picture perfect, nothing can go wrong. And if the company even slips a little bit, that's not great news for the stock because it does have a negative reaction. Whereas if you look at a company like Upstar where the expectations were rock bottom, right? They were expecting to report, some really, really mediocre numbers, and the growth has really slowed down, and it's just been coming down pretty substantially. Well, what happens? It reports even slightly better numbers, and the stock rallies almost 40%. So they are reporting, well, they reported a, fewer than expected loss, like less than an expected loss, 47 cents per share loss per share. It's still a loss, but it's less than what people were expecting. And revenue came in with a strong beat. So then you see a 40% rally. But for NVIDIA, unfortunately, the expectations are sky high. They're built for this company to perform perfectly. And that becomes a bit of a problem when you are in the investing game, because nothing is perfect. Nothing is guaranteed, and things change. And for those reasons, NVIDIA, in my opinion, could be in a very, very interesting predicament when the earnings are announced on May 24th. But resistance is going to be staying put at 292, 293. And the next resistance and target, in case we get a breakout, is going to be 347, 350 for NVIDIA. Next up, we got Advanced Micro Devices and AMD here, just basically flat up to over $95 per share. And resistance is going to stay put all the way up to $102, $103 over here for this company. So that right there is going to be that level to watch for AMD. Talking about PayPal, and PayPal here dropping over 12.7%. So very, very significant sell-off, starting to break down from this descending triangle even lower. And PayPal, for me, the company numbers were super great. It's now trading at even lower, P multiple, 65 divided by, let's just do 66 divided by 5. We're looking at 13.2 price to earnings multiple. If you take that reciprocal, we're looking at a 7.5% earnings yield for the company, and the free cash flow of $5 billion with 74 billion to 74 divided by 5, 15 times free cash flow, 5 divided by 74, we're looking at 6.75% free cash flow yield. So valuations come down, and I can't really make sense of why investors are not excited about PayPal, because the numbers were good. I mean, we got an EPS beat, revenue beat, guidance raised, margins increasing, transaction per active account increasing. So there's a lot of numbers going for PayPal that were suggesting some good company valuations and fundamentals, and yet the stock price is not reflecting that. And that's the disconnect that we have to understand. The stock price is not the company is not the stock price. I've mentioned this many times before, and this kind of does fit that profile of what Meta was 6 months ago. But I think the management change is necessary for PayPal to find some momentum, and we're going to see that post 2023. There's going to be new management coming in after 2023 is over. So we got to be patient. I'm patient, and I did sell cash secured puts on a PayPal today, which might get assigned considering how aggressively it is selling off. But hey, I don't mind. I mean, I'm paying 13 times earnings and a 14, 15 times cash flow. That's a good valuation for a company that's expected to grow 24, 25%. Not only in the current quarter, but of course over the coming years as well. So those are some things that I'm watching for when it comes to this company. Square, on the other hand, was flat. Again, no movement, up over 88 basis points and not really doing much. And support level is going to stay put somewhere around here at close to, again, $53, $54 per share. Those right there are going to be very, very strong area of support inside this green rectangle for Square. Now, talking a little bit about Meta Platforms, and Meta here was flat. Again, no movement, up 4 basis points. Again, it's the calm before the storm. Stocks are really just trading sideways in anticipation of what those earnings numbers, the inflation numbers are going to look like tomorrow. And resistance is going to stay put at $236. So this right here is going to be that level to watch, with the support staying put at 221, 222. So this right here, a very, very important level of support for Meta for now, and we got a gap to fill. We got gaps everywhere on Meta, right? We got gaps to the upside, gaps to the downside, gaps to way to the downside in the 150s. So I think it's going to be all over the place at the moment. And I do plan on selling covered calls in Meta again if it continues to rally quite aggressively here. Now, talking about Netflix, Netflix is still, I would say, in the symmetrical triangle. And again, we're making some lower highs and higher lows. It's really trying to break to the upside, but not really finding that momentum yet because of the lack of liquidity and volume, really. But that is going to be that resistance. And if you do end up breaking out, first immediate target is going to be a resistance here at 348, all the way up to as much as $380 for Netflix. And if you do end up breaking down, support level is going to stay put roughly at around 316 to as low as $275 per share for Netflix. Talking about Google, and Google here once again getting rejected at its resistance. We got up to as much as 110, You can see the candle down 28 basis points. We got up to that level. Sellers stepped in to bring us right back down. Got rejected and sell right back down to lower levels. And support level is going to stay put roughly at around $101, $102 in line with that 200 simple moving average. But similar to the market, what we're really seeing is Google also trades sideways. So this right here is a box within which Google's been trading at. Literally, it's been going sideways within that range for quite some time. So resistance is going to stay put at 109. Support level is going to be at roughly around $101, $102. Microsoft, on the other hand, is also starting to hit back on that resistance. So 312, 313 is a resistance that we have talked about for Microsoft, and we're now starting to see a little bit of a pullback. Support level is going to stay put at 292 to as low as $293 per share for Microsoft. And finally, we got Shopify. Shopify has had a very strong last few days after the earnings. We got a huge gap to fill on the downside, but next resistance and target is going to be at $75 with the support staying put at 54. RSI MACD incredibly overbought, so I'd be very careful with Shopify here because even though next target and resistance can be at 75, we are looking at a really overbought technical stock at the moment. So I hope you guys enjoyed this video and a complete update on the markets. Make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below if you're interested in joining us. There is a 16% discount that is available annually if you want to take advantage of that as well. As always, happy investing, and I'll see you all in the next video.